Hey everybody, my name is Christopher Terry, CEO of iMarkets Live, and we are doing a live class. And it's basically going to be called the basics of Forex. We're going to spend whatever time it is, maybe about an hour, hour and a half, and we're just going to go through some information with you just to kind of get you into the Forex market. This class is not made for those that are already in the markets. If you're here and you're already in the markets, and you already know this is not for you. It's for the guy who or girl who hold on one second, guys. Hold on one second. Hold on a second, guys. I gotta set up a link that I messed up here. Okay, let me just get this link. Sorry, sorry, but I had one of my guests here wanted to send a link to his family member. So, what is Forex? What is Forex? Forex is the exchange of currency. And like I said, whoever's on here tonight is not somebody who knows about this, and you're just here to support everybody else. And I hope, no, this is actually the second class, but this is actually the second class, Diego. But it's really the first class that we're actually going to start going into some of the technicals. Now, for those of you already within iMarkets Live, in the back office, we already have back to basics. We already have the beginning of what is Forex. We already have a lot of this stuff. But I really sometimes I just want to freshen it up a little bit. What is Forex? You ever go to the currency exchanges? You ever go to the airport? All right. You go to the airport and you see this, okay? You see this right here. And you see the Canadian dollar is so much. You see the Chinese currency, the euro, the Japanese yen. You get to see that what the conversion rate is. So for example, you go to the airport, you'll see the US dollar or the British pound or what the cost is for that currency. So let me bring you over here. View, market watch. Okay, and I'm going to bring you into the Forex world. Don't worry about it. I'm going to bring you in slowly. Okay. All right. So what we have here, if you look up at the top left, this is a symbol, and this is what we trade. Okay. Uh, Somebody says this is already what we know. All right. Hold on a second. All right. So on the left here, you're going to see a bunch of symbols on my chart. And we're going to discuss what they are in a moment. We deal with what they call major currencies. Major currencies. You have majors, you have minors. The major ones we look at are right here on the screen. The EUR, right? See that? That's euro. GBP, that's the British pound. The CHF, that's the Swiss franc. Now, don't worry about the little I. Every broker has their own little way of doing things. The JPY is the Japanese yen. The CAD is the Canadian dollar. The AUD is the Australian dollar. Right? So if you look at 1, 2, 3, 4, 5, 6, and then we got more down here. You got the NZD USD. You see that? The NZD USD. That's the New Zealand dollar. So you have everything from the euro, British pound, Swiss franc. The CHF is for some word. Don't pay attention to it. Just call it Swiss franc. Then you have the Japanese yen, Canadian dollar, Australian dollar. Right? Let's go down a little further. anything with the US next to it, okay? And the New Zealand dollar here. Now, the ones we don't care about, and I'm going to show you how to do this, and what I'm doing is teaching and showing you at the same time. So we're going to go to symbols, and actually I can't close this because we actually using this for our trading, our live trading stuff. So now when they are quote unquote paired, that means they are paired with the US dollar. So example, the EUR is paired with the US dollar, and the symbol that we trade with is the EUR USD. That's called a pair. Now the volume, most volume is around the US dollar. All right, so any pairs would be mostly around the US dollar. Look, you see all these different high, yes, it's being recorded. You see a lot of these quotes on the internet. A great site, great site is babypips.com. There's some good sites out there. iMarkets Live is a good one. But the ones with the US dollar, as you see, these are considered pairs. And the US dollar is around what they figure about 85% of all volume. And then right here, the EUR USD. This means the euro USD. And what you have here is the bid and ask price, what they would buy it for, what they would sell it for. Now, let's understand how money works. The introduction to Forex still, how money works. Let's just say you live in New York City and you want to go to Europe. Let's just say you want to go to Italy. Doesn't matter where you want to go, Europe. Now you say, I want to get 1,000 euros, okay? 1,000 euros. Well, what's 1,000 euros going to be? You're going to go to the currency exchange at the airport, or you're going to go to the currency exchange in the United States, or you're going to go to the currency exchange when you get to Europe. But let's just say you go to the currency exchange in the airport. You're going to say to them, I want 1,000 euro. So let me see if I can find currency exchange rates. Let me see if I can do this, okay? Let me see, 1 euro. Okay, right here. Currency converter, live currency exchange. Let's just say you go to the currency exchange and you want to see what the rates are. And it looks like this. Okay, so basically the rates here are exactly pretty much what you see on your screen. You see that? You love us? I love you too, man. I love you too, guys. The euro, you're going to go to Europe and you're going to buy euro and you're going to sell the dollar. What? What did he say? One more time. You're in the airport, you're from New York City, you go to Kennedy Airport and you say, I want to exchange my dollars for euros. I want 1,000 euro. I'm keeping it simple. So what you're going to do is sell your dollars and buy euro. You're going to hand them 1,000, 1,200, just figure about 1,000, 1,100, 1,150 bucks or 1,200 bucks, whatever it works out to be. If you look at the exchange rate I just posted to you right here, okay? Let me see what it is right here, $1.11. So you multiply that, okay, by $1,000, and that's it. You're going to get $1,125, and for your it's going to cost you $1,125 for 1,000 euro. You just exchange one country's currency for another country's currency. That's foreign exchange. You're exchanging your currency. Let's just say you want to go to England. And let me tell you the worst feeling in the world, guys. The worst feeling in the world is when you go to England from New York and you live in New York City and you got the best hotels in the world and you're paying $300-400. And you go to a Best Western in England, and you pay $300 in England because the exchange rate is so strong there, you feel completely broke. So Best Westerns, so when you understand currency exchange, oh my gosh, they come here and it seems like everything's half the price, and it's true. You go to Starbucks there, it's like $9 for a cup of coffee. So you want to go to England, and hold on a second. Everybody's got to hold on a second. Let me just hold on. Casey Weiss needs to ask me if we're going to have lunch next week. Hey, Casey, can you hold on a minute? We're doing a class. Oh, just focus on the class. We're good. Don't worry about it. You can buy me lunch. Listen, you want to buy me lunch, buy me lunch. But for now, let's participate with the hundreds of other people that want to learn. So we're good, man. And yes, Wolfgang Pucks. So so you're selling your currency. I'm trying to get this across to you guys on how money works. You want to go to England. You want to buy 1,000 British pounds. It's going to cost you $1,430. That is because the British pound is much stronger than our currency. Now, everything with the USD next to it is a pair, and that's how much you're going to pay for it. Look, you can use the word dominant and some, non-dominant. Look, bottom line is, you see the EUR, the CUUSD. I keep it real English. This is what it's going to cost to buy it. Okay. This is what it would cost if you were in Switzerland and you wanted to buy US dollars. It would cost you 99 cents. If you were in Japan and you wanted to convert to US dollars, it costs you 114 yen. That's how it works. All right, we'll do it in real English rather than doing it with the exact proper English definition, which doesn't make sense. Now, you have these pairs. Now, the euro is the highest volume pair out there. Most volume attracts to the euro because most people travel between the United States and Europe, and also it's a highly desired trading pair. I'm recording this call, somebody's asking. So the second highest volume is the British pound USD. Now, these are called pairs when they're paired with the US dollar. When they are not paired, this is called a cross. You're crossing the Euro USD with the GBP USD. So there's a calculation which I'm not going to get into, and quite honestly, it doesn't matter. All right. Listen, when you guys learn from me, you know how I am. I keep it straight real. All that other stuff, we don't need to worry about the mathematics. You need to know how to make money. All right. You're here to learn how to make money, not to worry about simple mathematics. But I'm going to tell you how it works. So to get to the cross, the EUR GBP, you're crossing the EUR USD with the GBP USD. If you want to know how that calculation works, there's a little search engine called Google. Google it. Enjoy your night. I did it. I don't really care. It doesn't affect me in any way. It doesn't affect you either. If you want to know what the EUR CHF, this is a cross. If you want to know how that works, it's to take in the US EUR USD, what the USD CHF, they're crossing it, and they're coming up with another number. Each one of these pairs, or I call symbols, it's easier for me to use the word symbol because I've been a stock trader forever. I've been a futures trader forever, and Forex trader forever. And to me, it's a symbol. You call it what you want. You call it a pair, cross. I like calling it symbols. It makes it easier for me. And each of them have their own bid and ask. The bid is what people want to buy it at, and the ask is what people want to sell it at. So if you say, I'd like to buy it, I would like to buy it at a certain price or sell it at a certain price. In Forex, it's kind of backwards. When you buy the euro in the Forex market, you're actually paying a higher price. In the trading environment, you're paying a price, and there's what they call a spread. There's a spread involved. Let me show you, for example. Okay, I'm going to take you a little bit forward. We'll go back, but I'm going to show you something here. Okay, let's just go to trade. Oh, I can't do it on this one. We could do it on this one. Okay, let me do it on here or on there. Insert or view terminal. Okay. Let's just say we want to buy one position. One is called a lot. And we're going to get into that in a minute. But I just want to buy one. You see this right here, the negative $10.50? That's because that's considered a spread. That's the difference between the bid and ask, and that's also included with some commissions. So when you buy or sell Forex, in there is what's called a spread between the bid and the ask. This is where the brokers make money, and they make a little commission spread, okay? So that's how it works. That's how money works. When you buy currency or sell currency at the exchange, they have a bid price and an ask price. Okay, what they're going to buy it from you and what they're going to sell it from you. Now, where's my other chart? Get back over here. Get back over here. Okay? So, what we've learned so far is there are currencies. When you go from one country, what the foreign exchange is trading one country's currency for another country's currency. What we also know is that in Forex, we have what's called pairs, where you're matching countries' currencies together, and we use the major currencies. We gave the different world currencies that we use. We also know that the ones that are together with the US dollar are called pairs, and the ones that are non-US connected are called crosses, and they're basically crossing the US dollar with that particular symbol and coming up with a new price. So what's great about it is, if you think about it, you have upwards of 30 different pairs that we look at. Let me just go to this chart right here and open this up for you. So we have about 30 different pairs that we look at and crosses symbols that we watch. We don't watch some of these other ones. We don't watch all this, Singapore or nothing like that. Although the president of our international is in Singapore right now, I couldn't care less about trading it because there's no volume in it. And I think he's online with us, so I just want to give him a shout out to Michael Alexander. Great man, great man. So now, what's great about it is trading Forex, you have multiple opportunities at all times. So let's think about it. You have 30 different pairs at work at any one time that are moving up and down and creating opportunity. So when price fluctuates, when price fluctuates, goes up and down, and we make money on these little fluctuations. Not going to get too deep into that now. But what's great about Forex is 30 different symbols to look at. And we look at different charts and different time frames, not to get too deep into it. But if we think about it, we have these different time frames. Watch this. I'm going to change the chart. So by changing the chart from the time frames, you change the picture. Now, what do these charts mean? The charts mean that every bar here, every bar that you see coordinates with the time frame up here. So for instance, if I press a D, this is a daily chart, and this is what happened yesterday. If I press an H4, this happened every 4 hours. If I press H1, each bar is an hour. I'm going to go lightly through this real quick. I'll come back to it. But essentially, each one of these time frames equate to a different market if you think about it. So if we have 1, 2, 3, 4, 5 different time frames times 30 symbols, if you think about it, we have 150 opportunity of markets to watch. So when I look at the markets, guys, for instance, the EUR-USD, I may look at it on a daily chart and look at an opportunity. I may look at this time frame. That's a whole different picture. If I look at it on this time frame, it's a different picture, and so on and so forth. So it's fair to say that this picture right here is different than this picture right here. So you actually get to treat them as a different market. So when I trade, I look at the different time frames and different symbols, and when I analyze the market, I'm looking at 150 markets in my mind, if that makes sense. So that's the beauty of foreign exchange, is you can look at many different ways to look at the same particular market. And so right now we know what Forex is, and we know what the major symbols are. We know how they interrelate with one another. Now, if we look at this, let me just do something here. Let me just do something. Okay, so let's take a daily chart. What's great about it is, similar to the stock market where you have tech stocks, you have Google and Amazon. Somebody's asking, what symbols do I basically like to keep my eye on? Quite honestly, I like the euro, the GBP. I like the yen. Those are like my favorite. Today we made some really good money this morning, last night and this morning on the JPY pairs. Hold on, drinking some water. You guys don't mind if I drink some water, do you? So I like those. But if we look at this, the EUR is paired with the USD. You see the picture? And then we go here and the EUR is paired with the British pound. Whole different picture. EUR is paired with this cross with the CHF, I'm sorry, Swiss franc. EUR is crossed with the Japanese yen. So when you look at them, you look at different markets. When I look at, you love it so far? Great. When I look at them, I look at which one is the strongest and which one is the weakest. I can bring these over. I look at everything of how I can interrelate them. You see that? So when I look at it, and I know we've looked at the EUR-CHF just recently, and I'm looking at this maybe to go down. But what I do is I look at other reasons. I look at the EUR USD, I look at the EUR GBP, and I look at them and how they relate to one another. So when you become a market analyst or a chartist, you'll start spending time relating these markets. So for instance, you're not going to look at the EUR versus the GBP. You're going to look at the EUR USD. How does it relate to the EUR GBP? How does it relate to the EUR CHF? And that's where the markets become fun, because you can become sort of a surgeon, a doctor, and you pick it apart. And this is what we do a lot of times in the London session. And I know a lot of times we get ahead of ourselves there because people come to trade. They don't come to really learn. And I have to spend the time on these webinars, which we'll do on Wednesdays. I think next week we're going to do some market geometry, maybe something a bit more powerful. And then the week after, we'll go back to the basics. But so we learned what the introduction of Forex is, the major currencies. Now, I'm always asked, what is the best time to trade? What is the best time to trade currencies? And personally, I like 2 o'clock in the morning to 4 o'clock in the morning. Now, why do I like that? Now, listen, again, I can keep it proper or I can keep it real. So I'm going to keep it real. London session, quote unquote, opens at 3 a.m. Eastern. I like being there an hour before, and I like being there an hour after. Those 2 hours of the day, for me, are the most important hours of the day. I don't really care about London, Tokyo or Australia or this or that. I don't really care. I care about the London session. The reason I care about the London session is that's when everything starts. That's when everything really kicks off. That's where most of the trading volume occurs. From 2 a.m. Eastern to 4 a.m. Eastern sets the tone for the day with your trading. Now, so you understand something, with the MetaTrader4 platform, for instance, this, you're going to see it's 2 a.m., right? 2 a.m. East, 2 a.m. Now that's the GMT, whatever that may be. I don't look at all of this. MetaTrader, so you know, every broker has a different, or some of them have the same and some of them are different in terms of the time. So if you look down here, the time is different than yours. So basically, if I look at this, this is 7 hours difference. Okay? So you do everything. And I'm quite honestly, I'm not a guy to sit and just do mathematics. Although right next to me, this guy has a 250 IQ. 250. I can't count to one. Okay? So he's the mathematician. Can you tell me what difference 7 hours is from what time it is right now? I'm in Vegas. That's New York time on my computer. And the other time is over there at 2 o'clock in the morning. You see how confused I am?
So
I can't even trade it this way.
Every phone has, like this application
Right.
with timing, so people can have it in hands and they can use it.
You see? You ask a guy what time it is, he's so genius, he'll tell you how to build the clock. You got 222? What's that? Your IQ's 2. Listen, together I got two guys that have like a 500 IQ. You know what? If we take a division of 3, guess what? I'm 180. Talk to me, baby. Talk to me. I'm smart by association. If we include Ronnie, we got 125. Oh man. So yeah, we got 100. Ronnie, you got 125 IQ now by association. These guys show up here with like stacks of casino chips. You guys ever seen the Rain Man? That's what I got. I got 2 of them right here. I threw $100 on the roulette table, and he looking down at it going 14, 14, 14. So, all right. So just break it up a little bit. The best times to trade are the London session for me at 2 o'clock Eastern to 4 o'clock Eastern. Then what I like to do is I like to take a break. I like to take a break for a few hours. Sometimes I like to sleep. Sometimes I stay up. But then I come back around 7:45, 8 o'clock Eastern for the New York session. And I look at it as that New York follow through. A lot of times I really don't find new opportunities in New York unless they're on a much higher time frame. If they're on a daily chart, where you going? Remember, catch me if you can. Where you going, Frank? So if you think about it, where you going? Right here, whether you got in yesterday or today, it doesn't matter. It's a daily chart. You really could care less. So if you got in London or you got in New York, a lot of times you're right in the same ballpark. A couple hours doesn't make a difference. But if you're looking at a 5-minute chart or a 15 or a 30-minute chart, of course, it's important that you're looking at the most liquid time frame and then going forward. So if we look right here, let's just see. I'm not even going to worry about the time here. I can't even do that kind of math. So to me, I like looking at the London session, 2 a.m. to 4 a.m. Now, I'm going to stop right there and say one thing. We got a lot of great people on the call here today. You got a lot of hungry people on the call today. You guys are here at 7:39 p.m. Eastern time on a Wednesday night, taking your time out of your schedule. Now, if I tell you it's extremely important, be on the London sessions with me in the morning. All right, so let me get you that schedule. Let me get you that link because real important that I don't, let me see here. This right here, copy registration link. What time does it start? UK time? I think like 7 or 8 o'clock. I don't particularly know. I just know through. You know what you do? Here's what you ask me what time it starts. The UK time. Here's what we do. Listen, I make it simple for you, my brother or my girl. I make it simple for you. Just show up to the London trading session, 2 a.m. Eastern to 4 a.m. You know what? The London session opens up. The London it opens up sometime. You figure out you Google it. Just Google it. So here's a link. Okay, I just gave you the link, and that's what we do at night. So tonight at 2 a.m. I'm going to be on there. We're going to be doing some training. Now, here's what's important. You're hungry enough to be here, right? You're hungry enough to be here with me on a Wednesday night. Don't screw up and don't not show up to London. Don't think, oh, you know what? Chris fed me a little bit. I don't need to go. I know I got a little bit of knowledge. All right? Don't go bragging to your friends how smart you are yet. I'm going to make you a beast, but I need you to show up to London. Okay, then you're going to say, you know what? I got to work in the morning. I have to be awake. I have to get up in the morning to go to work. You know what? You have a choice in life. You stay at your job, or you could be my assistant. I'll tell you, go get me coffee, go downstairs, get me water, take Ronnie for a walk. You know, you want to do that, that's fine. Or I could tell you, this is why we're buying, this is why we're selling, and I will I will help you. I will help you. He says, very entertaining, even no matter how tired you are. Exactly. Listen, you got to give up some sleep. You got to give up some sleep. I'm willing to do it for you. You got to be willing to be there with me, okay? I'm not being tough with you. I'm being real with you. Um, no, I don't record the London sessions unless I'm doing something specific. And yeah, I use the word pacifically also. All right. I know people say pacifically is not a word, but I use pacifically. I'm all in with that. So I don't care how tired you have to be. Just be there. I'm gonna get you. Yeah, no, it's a word now. I'm gonna get you free, guys. Who wants your freedom? Who on here wants your freedom? Who wants your freedom? What's your freedom date, guys? All right, what's your freedom date? What's the date that you're going to get free from that job? What's that date you're going to get free? Okay, claim it right now. Claim your freedom date. Okay, this is what you have to do every single day of the year is October 8th, May 8th. This is my date for financial freedom. I want you with us full time. A trading lifestyle, guys. If you had my lifestyle, you'd flip. All right, I have two of my friends showed up. We're walking through the casino. We're walking through the pools. We're hanging out eating. I can go. You can go anywhere you want. Life is yours to enjoy. But getting up to go to the man every day and kissing your wife goodbye. Let me tell you something. Nothing worse than kissing your wife goodbye, sending her off to go to a job so she can say to the boss, "Hey, boss, I love you. I'm going to be here for another 40 years because my husband don't want to get me free." You know what? Send her to my room. Send her to the room at London. Get you guys, we gotta get you free, okay? So, London session is so important. I don't mean to be rude. I got a little bit of an entertainment value in this, but I need you guys with me, and I will do the work. I'll do the heavy lifting. You do the learning, and you just follow me along the way. I promise you. You give me 2 weeks of your time. You're never gonna look back. You're never gonna look back. All right? You're only catching a little bit of my audio. Get a better computer, better internet connection. Or maybe mine's bad. I'm sorry. So anyway, let's rock and roll. Um, so let's break that up a little bit. Let's continue, guys. I'm all motivated here, all right? I'm motivated. I'm motivated. I'm motivated. So edit. Let's see. The best times to trade. Types of trading. Real important. Types of trading. We're not going to talk about binary options tonight. Not important. The New York trade session is very important. I'll tell you why. Because if you're looking for short-term trades, we could do that. Watch this. Let me show you something. If we wanted to, and we did this morning, all right? We traded the New York session, okay? We traded the New York session. You could play with some short-term scalps in here. Short-term trades on the small time frames. On the bigger time frames, you have the daily session now, or the 4 hour. Let's look at this, guys. Last night, it was pushing into a zone in London and in New York. And guess what? Tonight in London, whoops, tonight in London, it's still going to be here. So if you were trading this, it doesn't matter. It doesn't matter. Anywhere within the zone. Um, hold on a second. Okay. Yeah. Hold on one second. Hold on a second, guys. Okay. All right, guys. So don't worry about what's on the screen here. It's not important. But what the point is, when you're working with London or New York, if you're working with a higher time frame, they're both important to be at. If you're working with a very short time frame, you can come in at any time, 24 hours a day, and work the market. That's not important right now. Now, what I want to get into the power of leverage, the power of margin. All right, really important. I'm going to draw. I like to draw. That's what I do. I like to draw. So the power of leverage, the power of margin. Some brokers in the United States offer what they call a 50-to-1 leverage. Some brokers offer 200-to-1 leverage. Some offer 500-to-1 leverage. Some offer 1,000-to-1 leverage. Now, this is not a class to get you so deep into all of that. Let me see here. Yeah, this is not the class to get so detailed into that. That's going to be another class, but I'm just giving you more of an overview of things. 50-to-1. That means if you have $1,000 in the market, it's equivalent of having $50,000 of buying power. If you had $1,000 in cash, it's equal to $200,000 in buying power. So essentially, the market gives you leverage, okay, equals $500,000 in buying power. So I want you to think about this, guys. Let's just soak this in for a little bit. Let's just really soak this in. Okay, the power of leverage, and I want to put it in a way that you understand it, not in a confusing way that you won't understand it. Let's just say you wanted to buy a house. House is $250,000, okay? Let's just say your down payment is 10%, okay? Down payment of 10% on a house, okay? Let's just say the house, now you control $250,000 with $25,000. Okay, you've taken your $25,000, you've put it down. You now control a $250,000 piece of property. Let's just say in 1 year that house increases 10%. Okay, the house increases by 10%, and the house is now worth $275,000. Increased by 10% or $25,000. So now the house value is $275,000. Okay? The question is, I'm going to ask these guys, the IQ guys, what percentage did I make on my money? Ronnie wants an answer. She already knows the answer. So guys, the 250 IQ people, what percentage did I make on my money? This is good. This is good. They're both staring blankly. So, wait, one of them got an answer. Shh. You make it a hundred. No, you made 100% on the money. So you made 100%, right? On the cash, okay? Investment. So you made 100% on your money, and the reason why is because you use something called leverage. Okay, my family, my brothers and I, we own a company in New York City and a construction business. And when we build new buildings for the developers, we have what's called first right or refusal. And they have allotment of certain units that they put out to the market in what's called pre-construction. And the reason they do that is to raise capital. So they got 1,000 units in a building. They may take 100 and put them out for pre-construction, or 200 or whatever, and they'll put them out at a discount. So you actually can buy, for instance, say a unit is $2 million. You may be able to buy for 50%, 70%, 80%. It depends. but you're leveraging, you're using leverage. You're using a little bit what's called margin and leverage. You're leveraging your money because later on it's going to be worth a lot more. Same thing here. You buy a property worth $250,000 for $25,000. When that property increases, because you're controlling $250,000 and that increases 10%, your investment has now doubled. You see the power of leverage? That's the same thing in trading. The same thing in trading. You're leveraging your money in trading. There is a thing called margin. And let's just say we're going to use the standard 50 times because I have to do that because of it's legal in the United States. Although the other companies are legal, it's just that I want to keep things conservative. I don't want anybody to think they can come in and do $1 million on 1,000. And that's another class for another time. And I teach that. But a 50 to 1 leverage, okay, your $2,000. So they have what's called a standard lot, standard lot, mini lot, and micro lot. So when you're looking at the markets and we're trading the markets, they all have different trade sizes. For example, view, terminal. Actually, not that one. Let me do this other one. That's better. Okay. There's some noise outside, so I know my golden retrievers are going to start barking. So right up here, if you look here on MetaTrader 4, and this is what they call the gold standard of trading platforms for Forex, you have a 1.0, that's considered a standard lot. And I'm going to explain that. Then you have what's called a mini lot. A mini lot is 0.1 and a micro lot is 0.01. I'm going to explain that right now. Okay? So, standard lot, one lot controls $100,000. A mini lot, one lot controls 10,000. A micro lot, one lot controls 1,000. So when you're trading, you're going to determine how much volume you want to do, what the size is. Okay, and let me get rid of this. Let me get rid of this and go back up here. Okay? So, since you're controlling $100,000 on one lot, if you're using a 50 to 1 leverage, that would be a 2% deposit or down payment, which means you would put up $2,000 to control $100,000. Okay? So let's think about this again. 50 times the leverage. Now let's just say this was 100 times, 100 to 1. Well, you would put a 1% deposit or $1,000 to control $100,000. That's how that works. Let's just say it's 500 to 1. Well, you're going to put up $200 to control 100,000. But keeping it standard, okay, keeping it standard for like FXCM, does the deposit change when the margin amount changes? Yes, because the deposit is the margin. So, let me go back here. So, for a standard lot, you're controlling $100,000 with the 2% deposit. On a mini lot, you're controlling $10,000, and let's just say it's roughly $200. It's 10%. On a micro lot, you're going to invest $20 to control $1,000. That's the power of leverage, because when the fluctuation happens in the markets here, you see all these like little fluctuations, in price, and I'm not worried about the little prices right now. I'm just trying to get to you what margin and leverage is, okay? Margin and leverage is you're basically controlling a lot of money for a small deposit, and since it moves in very small increments, what they call a pip, and I'll get back to that, you're controlling a lot of money for a small deposit. And we work with something called pips, okay? It's price in percentage, all right? That's all it is. How many pips did you make? Now, in the old days, for instance, the euro, the old days, okay, 1, 2, 3, 4, 5. The old days of trading, you had the pip was the fourth digit. Now it's still the fourth digit, but you have what's called this micro pip or pip bet, or however you want to do it. Now, hold on, everybody. Somebody asked a very important question. Do you recommend the 1,000-to-1 with Trader's Way? Now, I'm not going to get into that right now, Chris, but I don't suggest initiating a trade on 1,000-to-1 leverage. I suggest initiating a trade with a 2% risk, and then when you accumulate positions, you can tap into this. You have to look at this like a big credit card, okay? When you get high leverage like this, you have to look at it as a credit card. Think about it, okay? Think about that. Let's just say you go to the bank, and the bank says, you have enough credit, I'm going to give you $100,000 worth of credit to use, to spend. Does that mean you take that $100,000 and go buy a Lamborghini? Or you take that $100,000 and say, you know what? I need a couple thousand to maybe invest into a business or something. So it's like a big credit card. You don't need to tap into it from the initial go. That's how you blow up. So the PIP is the fifth digit. Okay? 1, 2, 3, 4, 5. Right? I mean, the PIP at, or what they call a micro PIP, is the fifth digit. The fourth digit is called a PIP. So let me show you how that works. Right here. Let's just go right here. Okay, actually, let me go back to the other page, guys. Oh man, you believe you can fly. Oh man, I'm so happy for you. So right here, the fourth digit, how this works, standard lot. Oops. Let me just make some room here because Chris is having a little bit of fun. So let me just move this down a little bit in terms of size. Let's go down to an 18. There we go. All right. So let's continue. In a standard lot size equals $10 per pip. And what that means is $1 per pipette. Let's call it a pipette. Everybody has their own way of pipping it. Hey guys, who agrees with me? Pippin' ain't easy, but it sure is fun. Pippin' ain't easy, but it sure is fun. Ho! Love it when you call me Big Papa. Big Pippa. So my friends show up, and they said to me, because your name is Terry, it's Terry Christmas. Every morning in the London session is Terry Christmas. Oh, man. I love it when you call me Big Pippa. It's now Pippa. Pippa. Oh, man. Okay, so in the standard lot, it's $10 per pip. What that means when you trade the standard lot, guys, follow me here. 1.123355. Okay, 1, 2. I gotta change that. Why ain't it changing? You know what? I really don't care. So we're gonna call it green. So this right here, I can't even get this correct. You know what? I'm not leaving the house until I get this right. There we go. All right, everybody, we're gonna fix this right now immediately. Okay. So anyway, from here to here, guys, I screwed up my little blackboard. That's okay though, right? So 4, 5, the fourth digit, and if I can't spell correctly, that means you can make a lot of money in Forex too. So it's $10. So when you go from 1 point, 1.2345 to 1.2355, that's $10. When you go from 1.12333, excuse me, can somebody give me a 3? There we go. Somebody gave me a 3. 12345 to 1.12346. That's $1. So what you did was, and I did this 1, 2, 3, 4, whatever. The last number, the fifth digit, guys, is $1. Everybody's laughing. They're having a good time here. So let me go back. Let me get rid of that, okay? Let me get rid of that. I'll start it over again. Okay. 1.12345 to 1.12346 is equal to $1. That's better. So when you move a micro pip or pipette, that's $1. But when you work a full pip, that's $10. This is on some pairs. Some pairs are $8 and change. Everyone is different, but basing it on the EUR USD, for example, or one of these other pairs, it's $10. Just for argument's sake, when you go from pair to pair, cross to cross, things start getting a little convoluted. But I'm just showing you basically standardly, this is how it works. I don't want to confuse it too much. So the power of leverage and the power of margin. Now, if you think about it, you buy the market, you put $200 down to control $2,000 down to control 100. It goes up 20 quote unquote pips. You make 200 bucks. Yes, it's being recorded, my friend. I got you. I'm never going to not get you. Now that's on the standard lot. On the mini lot, the pip is $1 and the pipette is 10 cents. Chris has got you. Exactly. Okay. On a micro lot, the pip is 10 cents. Pipette. If I spelt it wrong, no, you get over it. Okay. You just follow me. So pip. One more time. Fourth digit, pip. Fifth digit, pip up hit. Okay? Let's do a trade. Leo Francisco says, let's do a trade. Okay, I'm going to trade you for somebody who pays attention. Fair enough, Leo? Tell me what. We're doing a class. All right. Leo, I love you, man. So somebody asks, so a lot is 1, A mini is 0.1 and a micro is 0.05. No, a micro is 0.01. Yes, James, no. Yes, yes, yes. So you got it. That's how simple it is. Okay? So when you look at the markets right now, we're going to go to the market and we're going to say, you know what? Let's do a trade. As Leo Francisco says, let's do a trade to show it. So let's do a trade, guys. What we're going to do is the EUR-USD. Let's do a trade. So if I bought the EUR-USD, it's what we have here. If you see this, this is called, and we learned, I'm going to go over everything again. Ready? So what we learned is the spread. We look in here 39.9 to 39.2, 38.9 to 39.2, 39 to 39.4. You see that? It's a three spread, right? Three micro pip spread. Let's buy it. Okay, FXCM. Okay. So we're buying it with a very tight spread. When the market changes, the pip changes, and the market's dead right now, so it's not really going to move so much. But every time the last number, you see that? The 9 goes to 8, goes to 8, goes to 8, goes to 8, goes to 8. Hello, it's got to move. There you go, 7, 6, 5, 4, 3, 2, 1. There it goes. So you see how fast that can move? What you have here is 1.8 pips. This is a standard lot, $10 a pip. There's 10 pipettes in one pip. So right here is 26. That's 2.6 pips. You see that? Or 26 pipettes. 2.3 pips. You see that? Everybody gets that? We're all getting that together? Yes, 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 yes? Oh, no, 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 no. Okay? All right. Very simple. So let's keep that there, and let's do something else. Let's go to point 1. No. Okay. Let's buy a point 1. Let's do a mini lot. That was a standard lot. You're controlling $100,000. We're doing a mini lot. Point 1. What you have here, you see that? You see that? This is now 10%. 10%. We're going to go even 10% of that. So if we look at exposure, it gives you a little exposure here, but standard lot moves in pips and moves at $10 per pip, $1 per pipette. Here, this moves at 10 cents per pip and pennies per pipette. I mean, $1 per pip, 10 cents per pipette. So right now you're going pipettes, 80, 90, $1. See that? Here, you have 10 cents per pip and a penny per pipette. The last digit is the pipette, the last digit. Matthew Robinson, my friend, congratulations on doing great in iMarkets Live. You're changing lives, Matthew. Do you know that? The amount of lives you're changing? Everybody loves you, Matt. I know sometimes I'm a little bit hard with you, but we love you. All right? So right here at the end, all right, the last digit, that's the pipette. So are we learning tonight, guys? Are we learning a little bit more than you knew when you came to the table? Come on, guys, talk to me. We're learning a little bit more than when you started, okay? That's all we're doing tonight. We're just learning a little bit, man. Taking it through. Good. I'm glad you guys are really, really happy. I'm seeing it all here. Yeah, last week was more or less an introduction. Okay, we're not going to do so much. Let's see. The power of margin and leverage. You guys understand how to do that? We're not going to worry about entering and exit tonight. Don't worry about that. That's another class. Kenny Nukes, I see you, brother. I see you, Sean. I see you, Adrian. I see you, Richard. I see you, Vigo. I see you, Daniel. I see you, Ronnie. Ronnie? You can't be named Ronnie. That's my golden retriever. I'm have everything recorded, man. We're recording everything. All right, guys. So Now, there's things called the futures, there's called the spot market, there's the indexes. I'm not going to worry about them tonight, guys. I'm not going to worry about them. Uh, we covered most of the stuff I'm covering. Now, what we covered here, the thought tonight was the introduction to Forex, the major currencies, how they relate, the best times to trade. The type of trading is basically where I'm going to get into that in a minute. The power of leverage and margin. I'm not going to get into the market versus stocks. I'm not going to get into that tonight. What's the bid and ask? What are the lot sizes? And setting up Metatrader 4. Quite honestly, I think going into setting up, um, um, somebody asked, since you're controlling more money, do you have to pay out? No, you can't pay out more. There's a certain limit you can lose. Um, in terms of setting up Metatrader 4, I think that would not be a class. Um, that would not be a class tonight. I'm going to separate that to a special class because it'll bore you, and I have to go through a lot of different steps, and I'm going to set it up. We'll do a separate class just for that. The type of trading. I want to bring you guys to something important here. I want to show you something. Okay? You're going to learn something right now that nobody else teaches. And the reason nobody else teaches it is they just don't teach it. Maybe they don't know about it. I don't know. It doesn't matter to me. There's some great people out there, guys. And I want you to understand something that I bring to the table what I bring to the table. Okay, simple. I bring steak to the table. I bring chicken to the table. I bring a sandwich to your table. And there are great educators out there. There are great people out there. They're whether they're my competition, not my competition, I could care less. All I say is, if you can get knowledge from anybody, get it. Go ahead. Go sit on. Listen, I sit on the internet. Let me show you guys something. Let me show you something. Okay. I'm in the markets 22 years. 20, actually more. Since 19, I've been investing. So let me show you something. Okay. Let me show you something. Do a search here for auction market theory. Okay. Auction market theory. I actually have something in here somewhere. I don't know where it is. I do a lot with market profile, and there's other ways to discuss it, but I do things called auction market theory. I do a lot with, it's called more or less market profile. And I happened to go on several years ago, and where did it go? Julian, where did you do your thing, Julian? Julian, where did you put your, this kid, this kid. All right, let's go back. This kid's a genius. All right, here we go.
Okay, everyone.
This, this video, I have to say, this video changed my game on market profile. And I do a lot with market profile. I'm actually a big market profile guy. I just don't bring it to the table when we're doing our work. And market profile is a phenomenal, phenomenal way to trade. It, and I'm not going to get into that today. But this kid right here did this. I want to tell you something. When he did this, he was 13 years old. Or 14 years old. Some age of 13, 14 years old. Name is Julian. Julian, forgot his last name. Julian something. He ended up going on Shark Tank, believe it or not. I knew about him prior. And he learned auction market theory. It's and stuff that I learned, basically all similar, except he has his own way of looking at it and explaining it. I'm 50 years old. When I learned this, I was like, on his stuff. I learned his stuff, how he looked at it. I was what, 40-some years old. He's a 13-year-old kid teaching it. What I'm trying to say is, wherever you can get knowledge, go out there and get it. Okay? Go out there and get it. Get the knowledge. I bring to the table some certain things. Yeah, you know why I don't look like I'm 50? Because I just laugh all the time. So, bottom line is, go out and get whatever knowledge you want. I could bring so much to the table. I have to say, it's highly successful knowledge, and I like to do certain things in a certain way. I don't like to convolute myself with all these different methodologies. I try to do everything organized, and I stick to what works. So, but there's nothing wrong with learning from others out there. That's what I'm trying to get at. This guy went on Shark Tank to give him $50,000. Quite honestly, probably blew it up. He probably lost it. You know, I wouldn't give a 13-year-old kid $50,000. What was Kevin O'Leary thinking? I would have gave $50,000 to the two women who came up with the seed popper. Well, kid, he's like, yeah, let's go. I'm gonna go on Shark Tank right now. You know, um, so I want to bring to the table something else. Let's talk. Let's look, guys. What we're looking at right here, all this, okay, all this, okay. Does anybody know what I'm drawing right here? Does anybody know what that is? Okay. Come on, everybody. You got all these big gurus out there. Come on, all the big gurus out there. Come on. I'm gonna keep doing this. I'm gonna let you guys all just. Okay, I'm gonna read off your answers in a minute. What's this? Since you're getting all the knowledge from all the gurus, right? There we go. There we go. La 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 la. What's this? So I got price overlay, moving average, Elliott wave, MACD, price action, price trend. Let's do the wave. Let's do the wave. All right. Hold on a second, guys. LaRue said, let's do the wave. We're doing the wave. We're all doing the wave. Got everybody doing the wave. All right. We did the wave. So the long line, the M's and W's. Okay. Let me tell you what we got here. This is called a trade. Oh, man. Let me tell you something. One thing I can't do is draw. You're all laughing at me. Man, go back to where you came from. You'll laugh at me. All right. We're going to type it in. This is called a trading line. Okay? A trading line. Okay? You never hear this out there in the industry. I come from old school. I'm an OG trader, okay? So, trading line. Watch this. Up 50 pips. Down 50 pips. Up 70. Down 30. Up 20. Down 100. Up 10. Down 20. Up 70. Down 60. Up. You get it, guys? This is a trading line. Okay? That's a trading line. Oh, somebody had audio problems. I got to come back. This is my whiteboard. So this is called a trading line. So there's different types of trading. When you are trading, you want to know what your best, what is best for you in terms of risk and reward. Okay, risk and reward. If you can only risk a little bit, you have to work on a little bit of a time frame. If you could risk more, for instance, let's just take this right here. Okay, from here to here, that's 28 pips, right? To the swing low. Well, let's go to 1 hour chart, okay? Or daily chart, okay? Let's say you want to risk down here, okay? You are looking at much larger risk of 140 pips. So with a very small account, you can't trade a very large time frame. Smaller accounts require you to stay on a smaller time frame. It's just unfortunate. Okay, it is what it is. When you risk on the larger time frame with a little bit of an account, the impact percentage wise doesn't work out so well. What do I mean? Let's just say we were trading this and you had $1,000 account, and right now you wanted to risk 130 pips. Well, on $1,000 account, let's just say you did one micro lot, that would be $13.50 on $1,000. If you lost, you would lose 1.3%. Imagine if you had a $50 trading account with that same percentage, you would lose $13.50 on $50, or you would lose about 40% of your money. Okay? So when you look at the market, you have to also determine the time frame and what the opportunity normally can bring you. So for instance, if you understand the trading line and what's the average of the swings, then you could determine the average of your targets, right? So if we look here and we say, okay, average swing is 112 to 116, that's 40 pips. We know that by putting your trade on here, you have 20, 30 pip risk and potentially 40 pip profit, okay? You could then do your math in terms of risk, but you look at the trading line, and if the trading line is not really sufficient of what you need, you got to step up to the next time frame. So the most important thing when looking at the market is your trading line, and that gives you risk and reward. Most people in the industry really don't get that, and quite honestly, so it's kind of how I look at things. Let me see here. Let me just see here. Okay. 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 So I gotta take care of something for. Okay. But anyway, all right. So let's say, can you please explain quick 3-minute lesson how to read Fibonacci? It's used for a retracement, correct or incorrect. This will help me tremendously. Please. Thank you, Chris. Hold on a second. Let me do YouTube. Hold on a second. One of my friends is, dude, you sound like you got tuberculosis. Don't worry about it. I tell everybody that. So what do we got here? Let me look for market geometry. Market geometry. Market geometry. Geometry. Okay, Christopher Terry. Because I'll be honest with you, for me to get into it now, I think it'll be a little bit too much. So what I'm going to do is look for market geometry. Chris, I think I have it available. If I do, okay. All right, guys, what we're going to do, Ronnie calls out trades all the time. That's what she does. So here's a class I did on market geometry for those that want to learn it. Let me see, I had another one that I did on market geometry, Christopher Terry. I wouldn't listen to that guy. He's crazy. Okay, let me just, I think, I see a YouTube video. I see a YouTube video from one of the guys in my company, and it was one of the videos I did. And this guy had a video that we did. He put it on the YouTube, and he got contacted by a guy. Okay, wait. I think this is the video. Hold on a second, guys. Richard, let me respond to your. Yeah, he did a. He ended up putting it out there, and some guy found it, and he's built a significant business over in Minnesota. Right here, watch that video. It's commonality, price relationships. I get into let me just see. Again, I get a lot into the market geometry side of the equation and breaking down the golden ratio and all that. So um, I would watch that last video I did. It was done about 4 years ago, 3 years ago. Actually, it was published in May 2013. I think that may have been correct. Actually, that's when it was. I was doing stuff for a trade station back then. So yeah, yeah, I'm gonna post it to the website. I have to clean it up, guys. I have to clean it up. I want to make sure that everything's right. None of my antics on there because you guys know how I am. I do things and I look back and go, I shouldn't have done that. So am I gonna show what video? Oh, you know what? Yeah, you're right. You're right. You're right. You're right. Let me do that. Let me do that. Okay, right here, guys. If you search market geometry, Christopher Terry, there's a thing called Spotlight On from TradeStation. Right here, Spotlight On. Wow, look who it is, man. It's Austin Godsey. Oh my God. Oh my God. See, this guy right here, one of the most amazing people in the planet. Where'd he go? Where'd Austin go? Oh, holy hell. He disappeared. Well, wherever he is, he's gone. He's gone. All right, right here. He's a $35,000 earner in my company per month. So he's been doing very well, sharing with the world what we're doing here, kicking butt. All right, guys, we're about it. I'm running down at about an hour and a half into this, and let's take the class. And you're only here for the antics, Becky. So I just want to thank each and every one of you. I'm not going to go the full 2 hours. We don't need to. We covered more than about what I wanted to cover today, and we will cover the rest next week. I'll do 2 classes next week, one for basics and one for advanced. I'll do something, maybe some advanced market geometry or something. All right, do something really good. I'll keep going along with the basics, and we'll create a big course out of this. Guys, I love each and every one of you. I appreciate your time. And when I finish this, I'll save the recording. I'll send it out to everybody up on iMarkets Live, and we'll put it together. So before we go, don't leave, don't leave, don't leave, don't leave, don't leave me. Give me your freedom date, guys. Come on, I'm here for you. What's your freedom date? Help me help you. Help me help you get free, guys. Who's claiming their date, guys? Who's claiming it? Who's claiming your date, guys? Write it down. Talk to me, guys. There we go. Love it. Love it. Love it. Love it, guys. Love it. Awesome. Just write that down, guys. Write that down. Write down your freedom date, guys. The countdown begins tonight. All right? The countdown begins tonight. Who's showing up in London session with me? Who's showing up in London session? You got to show up in London session with me, guys. We got to go. We got to go. We got to do it, man. We got to do it. This is, oh, man. All right, listen. Here's what I'm going to do. I got something cool I'm planning. I'm planning it. I'm thinking about doing something cool in Vegas, maybe live, right here, right where I live. I'm going to look for 10 or 12 of the best students. Guys are really hungry, and I'm bringing them to Vegas with me, guys. I'm going to do something special. I'll do a whole weekend for free. You just got to get here. I'm going to put a little contest, a little something out there. I will give you, myself, just only us, a group of 10. It's coming. You wait. I haven't released it yet, but I will. Guys that just want to do trading. Got something cool about it, guys. You watch what we're coming. 2016. Let me tell you about iMarkets Live, what we have coming. What you see here is a scanner. The scanner has revolutionized the whole game that's out there. Let me tell you what else is coming. Let me tell you what else is coming. I'm taking the scanner as you see it. I'm putting it on a website app. That means no more downloading Metatrader4. You can take the sucker, go viral, okay? Go viral with it. It's coming very, very fast. Trust me. The other thing we're doing, I'm not worried about the auto trader. That's coming. That's going to take a little time. but I have other things programmed. Well, we will have scanners for other models that I have. Really, 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 really cool stuff. So it's coming. We got a lot of things for 2016. I promise you guys. I'm not raising the prices. We're going to stay where we are. We're going to keep loading stuff into our package. We're so far ahead of any other company in history that's ever come to the table in trading. There is no other company in the history that could ever even compare to us. All right. Number one, listen, guys, so you understand, in the retail side, all right, the retail side, the people ain't got. Listen, I'm being straight with you. My competitors ain't got that kind. Don't have that kind of money to put into programmers. I have 10 full-time programmers, 2 guys in one office, 8 in another. Tell me another trading company that does education that has full-time staff. I mean, a full-time staff just to create stuff. They don't have it. It costs them too much money. Okay. All right. So the auto traders getting. We just disconnect. I'll explain that in a second. So anything on the network marketing side, there's no other company. We're the only company, guys. We're the only company that does trading. There is nobody out there. Nothing. All right. You're at the right place at the right time. I got good traders around us, so you understand. People in iMarkets Live, some of the good guys that I've been connecting with and we've been putting together are going to come to the forefront in trading. We got really, really good quality people around us. Guys, stick close. Complete domination, world domination. Guys, in terms of the auto trader, so you understand, I added 3 new traders. We have a total of 4. Took a few days to interconnect everything. And, the holiday screwed me up a little bit. Everybody wanted to relax, the programmers. But everything's been turned on or being turned on tonight. Thank God. So you're going to get a lot of pips and points and all that. I got about another 3 to 4 guys live that are going to be trading with us. What we got coming, guys. So the $15 a month Traders Way. The $15 a month you have to pay for Traders Way right now. So you understand what that is. That's paying for servers. Like I could put your terminal on server, and I'm working together with Traders Way to get rid of it. It's just going to take time, so a few months. So I'm going to work to try to get rid of it. It's just going to take time, guys. Listen, I love each and every one of you. I'll see you tonight. Let's rock it, man. 2016, total domination. iMarkets Live. Look out for our next emails. Guys, we're coming for you. We're going to make sure you get the best education and the best support ever. I'm out of here, guys. I'll send the email out once we're on fire. You are on fire. All right? We never end a night without some excitement. All right. So what's my saying? All my people making money. Booyah. Come on, everybody just put it in there. Merry Christmas. All my people making money. That's it. All my people, everybody's putting it now. All my people making money. Merry Christmas. All right, guys. Oh my God. I have 2 people here. Their minds are blown right now. Their mouth is open going, what is going on? All right, guys. Catch you later on. I'll send the email out once it's edited. Rock and roll. Bye-bye.